I'm assuming the fact that you are on camera means you are a Republican like me and you're not watching the royal wedding in the UK.
Oh, you can't help but watch it out of the corner of your eye. But yes, you know, a very auspicious day in the United Kingdom today with the wedding, the royal wedding going on right there. She has a beautiful dress, looking wonderful, and I would just say mazel tov to them and wish them all the best in their union.
I was trying to see if there's any share that has moved because the Prince of the UK is marrying his sweetheart. But let's talk about the way the money is going today. In terms of the overall market, let's begin perhaps by looking at the credit numbers that we saw coming out today, showing very much a picture that is mixed. We've got corporates still not borrowing, and at the same time, we've got households starting to borrow again.
Yeah, you know, I think it just really goes to show that it's going to take a long time for this recovery to really start taking a full bite of the economy. And, you know, these numbers just show that there's still very high, relatively very high levels for households and also business confidence, debt levels that is for households. And business confidence is still very weak in terms of, you know, as for the outlook for the business economy in South Africa. So I think, you know, these numbers just show that the recovery is still very subdued, and you know, it will still take a very long time for any momentum to actually be gained in credit extension.
Do these numbers sway in your mind and in the Nedbank book the minds of the Reserve Bank members of the Central Monetary Policy Committee?
Yeah, you know, there certainly are something that the Reserve Bank will be looking at. However, you know, I think inflation is what the Reserve Bank is trying to control right now. And when you look at inflation, it's all exogenous factors such as high food prices, high oil prices that they're going to have to start looking at. We still are of the belief that, you know, look, these factors that will maybe influence the Reserve Bank have increased and have worsened so much in the past couple of months. However, we're still anticipating that you know, we'll first see the first rises in the first quarter of 2012 of interest rates, because I mean, we're still of the belief that you know, tightening at the moment may not necessarily help the economy. There's still very low levels of growth in all the industries.
Yeah. Now let's take a look at where the markets are trading, the equities particularly. Now, as Sam was saying there, the market is trading pretty flat today. We do know that volumes have been thin because of all the holidays, and also next week on Monday, we know the UK is going to be closed. Probably China as well is going to be closed. But just in terms of the money that we've seen coming into the South African market from abroad, we've seen a lot of money coming into bonds. The numbers that we're looking at are suggesting that for the month to date, we're looking at 14.7 billion rand. Would you say some of that money has come into equities?
Yeah, I think you know, we can see that translated into the strong rand. You know, clearly there's some buying of rand activity going on there, and it has gone into equities ever so slightly. But you know, I think this week was a very tough week, as you mentioned, with you know, subdued volumes and thin trading with all the public holidays, both locally and internationally. And I think, you know, there's also a little bit of cautiousness out there in the sense that China may also tighten their monetary policies there. So you know, I think a lot of players are waiting for you know, more liquidity to come back into the markets, and then we'll see really are these gains in the international markets going to be translated into the South African market? Yeah,
one looking at the US market would actually believe that we're in boom times, and we've got the Nasdaq sitting close to 10-year highs, and we also had Samantha talking about the US market overall being up, despite the fact that we got those numbers coming out of the US yesterday suggesting that the economy is actually still not very weak, but it's not as strong as perhaps people expected, with that number that came out yesterday at 1.9%.
Yeah, 1.8% versus an expected 2% in the GDP figures that come out of the United States is very disappointing to the market. And I think also the jobless numbers that come out there is also very disappointing. And, you know, the United States shrugged it off, rather looked at company earnings. And I think perhaps going forward, they still do anticipate that overall for 2011, growth would have been around about 2.5% to 3% in the United States. So only time will tell. But, you know, so far nothing is encouraging in that economy. But it seems that players or market players are not necessarily looking at economic data so much as they're looking at corporate data.
Absolutely, but those numbers are also doing little in terms of trying to get us to an exchange rate of the rand that would make the government happy. We've seen the rand trading at close to 4-month highs against the US dollar. Against that background, where do you see the currency going to next week?
Sure, it's a very, very tough call to make. I think, you know, it's mainly dollar weakness that we also seeing in the market. If you look at the euro's performance, you know, I think really going back when we see all the players come back and liquidity come back next week, it will be really telling. And I think what the government has always said is that they're not really trying to actively manage the rand, so they will let it be free flowing and go to whichever levels they want to. And that also really does help with the imported inflation concerns that we have in the country. So a strong rand is somehow working towards our favor right now. But next week, I think these kind of levels are going to persist, perhaps around about 670, between 660 and 670, you know, at the start of next week, and perhaps strengthening even further to about 655, perhaps.
Yeah, and perhaps we would also start seeing some of the volume is increasing. But we of course know that the government cannot afford to take on the market in terms of determining the direction of the exchange rate. But there's an interesting dynamic that I'm seeing here developing, because everybody now seems to be talking like the dollar is a one-way bet. In other words, we're going to see the dollar weaken and the dollar weaken, and nobody is talking about the other side of it. If I may just remind you, I don't know how old you were in 1981. People were talking about the rand as a one-way bet, and we do know what happened after that.
Yes, I think it's a changing economy quite a bit. The dollar is under different kind of strain and different kind of trading environment than it was in back in the early 80s. And you know, going forward, I think you know, people will be looking for alternatives to the dollar, such as gold. We've seen gold perform pretty well from the past 2 weeks, I would say, hitting all-time highs. And right now has come back a little bit, trading at about 1,535, perhaps to the per ounce. And you know, I think you know, there's other stores of value. It's also a very low interest rate environment in the United States, and with the eurozone having now hiked rates, you know, that we'll see a lot of people selling dollars and going into the European areas. They're trying to get some yield pickups, and also then our economy will benefit from you know, from yield pickup, well, the search for yield pickup.
Yeah, but I suppose some of those stores of value should really be translating into some of our gold companies, but we haven't really seen valuations go our way, have they?
You know, I think gold miners, you know, in South Africa have got such a double-edged sword. The rand strength has really not worked too well towards the mining profits that would have expected them to gain. I think the rand price of gold is sitting at about 10,000 rands, which is near all-time highs. I think we last saw that at about in 2009, which was 2 years ago. And you know, I think it's just really not worked out as well as we would have hoped, because also the input costs for these gold miners has risen as far as labor and electricity mainly are concerned. And so really the valuations are not looking as good as we'd like to see them for the gold miners, and that's strictly because of what the rand performance has been. Absolutely.
And also, if you take then the view, if you take my argument and believe it, that, you know, the US dollar is not going to be a one-way bet, and at some point we're going to see the rand weaken, I would imagine now would be the time to buy your Harmonies, now would be the time to buy your Goldfields, and perhaps to a lesser extent your Anglo Golds, given the spread of their assets across the continent.
Yeah, you know, look, I don't necessarily believe that. At the moment, I think it's because the strong rand has really impacted those gold stocks. I mean, if you look at them this week, they really haven't performed as well as we would have expected them to with the rising gold price. And really, it's just you know, you'd have to make a call on the rand a little bit more so than making a call on the dollar. Sorry, on the gold price. And if you anticipate that the rand will perhaps weaken a little bit, maybe to be trading about 670, then maybe perhaps it is the time to go into gold stocks. But you know, I think you know, people must just tread a little bit carefully there and just understand that the rand strength does not bode well for the mining profits.